really interesting because we started to actually dig down into some of the interesting points of Bitcoin as a thing, including the number of machines there are, the number of machines that are mining. And when I initially drafted my talk, I said, oh, there must be, I said millions of machines. And I sent it along to one of my friends who studies this carefully. He's like, nah, it's a couple 100,000, Mark. It's a lot less than I thought. And when you're talking about having 15 or 20% of those machines, it's a smaller number than I thought. You know, I thought there might be Google-sized farms of millions of computers that are sitting there calculating away. Probably there will be, because what we're starting to see, particularly if, Sam, if you're successful, we're going to see this very interesting marriage of capital to ASIC production, right? You're building a pipeline to funnel capital into mining. And I think it's very clever. I wish you every success. If you do it, other people are going to copy it, so you'll have competitors. That's okay. That's supposed to happen. It's a sign of success. But when you marry those, then the number of machines that are doing the mining starts to grow dramatically because it becomes a successful investment vehicle. All right. Are we good for Kevin? So, we're about to hear from Kevin Zhou. Kevin is head of trading operations at Buttercoin, a US-based Bitcoin startup company that develops a white label platform for Bitcoin trading. Remember, we were talking about white labeling earlier, creating local Bitcoin marketplaces, and provides liquidity for Bitcoin enterprises. He's a managing partner at Mandelbrot Ventures. Kevin comes from a quant finance background and has been part of the Bitcoin community since early 2011. Ladies and gentlemen, let's welcome Kevin Zhou. All right, so Kevin, you are a Bitcoin economist. Could you tell us what that is and what you do and how that contributes to the overall ecosystem of Bitcoin?
Yeah, sure. So I think to start, I'd like to say that, economist is sort of a misnomer. I think at a startup, you definitely wear a lot of different hats. In particular, what I do is I man the trading desk at Buttercoin, and I facilitate OTC trading through that desk, as well as help design certain functionality on our marketplace for geared more towards professional traders, institutional investors, asset managers, that sort of thing. And I think as sort of a quant from a quant background, I really find that it's I think data is really a really interesting thing. And when you have a lot of data on, let's say, the price history of any type of asset, Bitcoin included, you can do a lot of things with that, and you can sort of see, for example, transaction volume and how that affects the price. Or you can look at things like, what types of structured products might emerge from this ecosystem that sort of reflects or mimics the sort of structured products that you see in the real world financial markets outside of Bitcoin. So I'd say that I sort of do that sort of thing. I think economics is sort of that word. It sort of represents more of like a armchair academic kind of philosophizing ordeal. But I think at a startup, there's a lot of things to do in building a company, and I think you have to do a lot more than just sit in a chair and think. So,
all right. So you work on making the markets better, more liquid, more functional. So what does that actually involve?
Well, I think when you look at a market, really there's two sides to that. You have people who are issuing market orders, so they're sort of taking liquidity, and then you have folks that are providing liquidity, like market makers. So one of the things that I do is I go out and I find market makers to help provide liquidity to our order book and make sure that if you have a trade to execute, if you want to buy or sell Bitcoin, that you're able to at a decent price and without much slippage, that you don't really pay up that much in order to express your trading opinion or idea or strategy.
Was it difficult to get started in this, in the sense, was it difficult to find people who you could use to actually make a market with, or were there plenty of people around that you could use to actually make markets with?
Yeah, I actually found it a little bit surprising. I thought in the beginning that it would be a lot more difficult than it was. I think that there's actually a lot of institutional interest in Bitcoin, and I've talked to a number of different prop shops, prop trading desks, and hedge funds, and there's definitely been a strong interest in providing market making and liquidity in exchanges or marketplaces order books.
Are a lot of these organizations then already doing Bitcoin trades and we just haven't really heard about that?
Yeah, I think, in like the hedge fund space and the high frequency trading space, most of these shops are really small. There's just not that many people and they're very secretive. So from the folks that I've talked with, there's been a lot of interest. And, for some of the bigger companies that do this type of trading, I've talked with individual traders who, maybe trade Bitcoin in their own portfolio, though maybe their company, it's against company policy to touch Bitcoin as of right now. But I think, the interest is there, and I think that that'll probably develop as we go forward.
Yeah, I have a good friend who is one of the planner/futurists at HSBC, and he told me 2 years ago that they already had space in their spreadsheets for 5 years out, so that would be 2017, that included a digital currency. He said, we think it's going to be Bitcoin, but 2 years ago, who really knew? When do you reckon that we'll actually see the larger institutions start to fill in that line on their worksheets? Is this a regulatory thing, or is this more of a taking the plunge sort of thing?
Oh, I think it's a little bit of both. I think the larger companies are, they're waiting for some type of regulatory clarity before they sort of move in, and they're a little bit more on the conservative front, though the interest is there. And I also think that, there's a lot of, education that needs to be done. I've talked with folks from some of the large banks, and it's actually very surprising how little they know about Bitcoin. Of course, everybody's heard of it. Everybody's, seen snippets of it on the news, but I think there could be a lot more done for them, to get to a point where they really understand exactly what Bitcoin is and how it works and why, it functions sort of as a better payment system. It solves a lot of remittance problems, and just in general, all of the benefits of having this type of distributed ledger through which like everybody can agree that certain accounts hold what money. I think if you look at the history of money. There's never really been a fully distributed ledger before. Normally, if you use PayPal or you use a bank, it's that institution, it's PayPal or it's that bank that holds the ledger that decides how much money is in each account. So, for Bitcoin, for the first time, you don't actually need a central authority to sort of achieve this type of consensus on how many Bitcoins are in what account. I mean, everybody agrees, but there's no central authority that's mandating, that to be the case. So,
if banks are sort of teetering on acceptance, or institutions are teetering on acceptance because, some of it's just their innate conservatism and some of it's regulatory clarity, do you think that when New York finishes up the work on its bit license and puts it out there and it seems to be acceptable enough to all parties, are we going to suddenly see this enormous institutional piling in? And if so, what is that going to do to the Bitcoin market?
Yeah, I think that's exactly what's going to happen. And I think, first you're going to see a lot of these small, more secretive, hedge funds and prop shops, and then, followed by larger institutions, family offices, asset managers, and then finally, pension funds, education funds, and then eventually the general public. And I think, the market only has room to grow. And I think we've, over the past 3 years, we've really seen it grow a lot already. And I think, in the next, 3 to 5 years, we're really going to see, in my opinion, massive institutional adoption and eventually public adoption.
So Buttercoin is essentially sort of providing a lot of the the infrastructure for a lot of this, right? Because the things that you do basically make it really easy for other organizations to transact in Bitcoin, right?
Yeah, absolutely. So, with Buttercoin, we have a very strong API. You can build all types of applications on it. And, if your application requires the buying or selling of Bitcoin, you can hook directly up to it. And you have access to this sort of large liquidity pool. And I think, we're sort of moving more towards, I think, professional type of marketplace or exchange from, in Bitcoin in the old days, it was just a bunch of folks just hack together a trading platform, and you could just buy and sell Bitcoin, but there was no guarantees of security. There was no regulatory oversight, and I think now we're moving more towards a professional setting, a setting that where institutions and normal folks can feel very comfortable and secure about buying and selling Bitcoins through that platform.
So does that mean that you're starting to bake some of those features into the services that you're providing because you know that your customers are going to need them even if they don't know that they're asking for them yet?
Oh, absolutely. I think, the one thing that's on everybody's mind after the whole Mt. Gox fiasco is the idea of having very secure Bitcoin wallets and Bitcoin storage. And I think, the Bitcoin community's moved grown a lot in that regard, and I think security today is very unlike security how it was a year or two ago. So I think with multi-sig security coming out with different ways of doing cold storage, better ways of doing cold storage, I think ecosystems really evolved to just become a lot stronger in that regard.
Bitcoin has been characterized as being quite volatile in terms of its price fluctuations. And certainly, just over the last, 18 months, we've seen it from a high of $1,600 to a low of, I don't know, what was it, probably around $160 in that period of time. Do you think, just putting on your economist hat and asking you to do a little bit of forecasting, do we see a future that is more volatile or less volatile?
Well, I think it's definitely going to be less volatile. As we see greater mass adoption, the price is definitely going to stabilize. And I think, if you really look at Bitcoin right now, it's just a couple of billion in market cap. It's really like, in some ways, a very small cap, stock. And, as we see more money flow into it, and we see, more market makers, more institutions moving in, we're going to see stronger price stability. And I think at that point, it can also be, it'll become a better unit of account. So I think right now, that's one thing that's lacking, that it's very difficult to price things in Bitcoin because of the volatility. But I think, we're moving in that direction. And I think, next 3 to 5 years, we're going to see a much stronger price stability.
Do we have questions for Kevin? We've got a real, honest-to-goodness Bitcoin economist in the room. Yes, question up front from Sam.
Hey, Kevin. Given your market-making capabilities and your access to liquidity, do you participate into any arbitrage opportunities, as we've seen spreads widen and shrink over time between exchanges?
So I think for arbitrage opportunities, I think pure arbitrage existed maybe a year and a half ago and before that. I think these days, you're going to find that there's a lot of bots out there trading in all these different Bitcoin markets, and these arbitrage opportunities last only a few seconds, and they don't really persist. Sometimes you do see strong differences in price between various exchanges and marketplaces, but actually it's not actually an arbitrage opportunity. A lot of times it's just that intrinsically, there's different properties to different exchanges. For example, certain exchanges that have all of a sudden stopped allowing deposits, or all of a sudden stopped allowing withdrawals, they're going to see differences in the price versus exchanges where the money flows more freely. I think today there's still a lot of opportunity for statistical arbitrage. So that's sort of where these hedge funds can come in, and they can do all sorts of back testing their algo strategies. They can try and get faster connections to do more of like the HFT kind of stuff. So I think that there's still a lot of opportunity for in that sense. speculating on statistical arbitrage, but I think pure arbitrage is it's very difficult, I think.
So this is Mark again. I just wanted to ask you, when you think about the maturity of foreign exchange market trading and all the systems that are used around that, and you take a look at Bitcoin market trading, is there any comparison? Is it nearly as mature? Is it not at all mature? Is it more mature?
Yeah, I think the Bitcoin markets are still very nascent right now. I think, in the real markets, you have things like futures, you have options, you have all these different derivatives and structured products. But, for Bitcoin, we're just beginning to see futures markets and Bitcoin becoming liquid. We're just beginning to see, margin trading. So I think that there's a lot of room for, I guess, financial innovation on that front in the Bitcoin markets. So I think things are still very early.
So that means that a lot of what we'll be seeing happening over the next couple of years are people building the same financial instruments in Bitcoin that we're already using for government currencies.
Yeah, sure. So, for example, one structured product that'd be very easy that I haven't seen so far would be you take Bitcoin as well as a bunch of the top 10 alt currencies, and you create some type of volume weighted basket, and then investors can invest into that fund, which will auto rebalance based on the varying market caps of the top 10 cryptos. This type of basket structure we haven't really seen being offered, and I think this is something that I think the banks themselves have a lot of expertise in, at least investment banks have a lot of, expertise in creating. So I think once we see that type of, institution move into the Bitcoin space, we're going to see, a plethora of that type of structured product, as well as, a whole bunch of others like reverse convertibles, like calls and puts. I think there's, for example, I'd like to draw another example, which is that, call and put option pricing is not a trivial thing. It's not that easy to do, and there's been a lot of literature and a lot of history on being able to price options better and better over the years. And I think with Bitcoin, because it has certain different properties than other currencies and other assets, you're going to have to figure out exactly how to price those options. And I think that's not a trivial task. I think there's a lot of there's a lot of work to be done there. But I think the benefits are going to be very massive in the sense that what we think about when we think about options today, it's sort of like you might get it as an employee in a certain company. You get these stock options, and you can exercise them. If the price goes up, then you're good. If the price goes down, well, you don't really lose anything, that sort of thing. So in Bitcoin companies, if you want to offer your employees Bitcoin options as compensation, then you're going to have to figure out where can I find an option, where can I find an options market, and I think we haven't seen it yet, but I think in the coming years we are going to see that develop. I think we're going to see a very vibrant options market, but I think first of all the underlying, which is Bitcoin itself, has to become more liquid, and it also has to just have a much larger market cap. So I think Bitcoin needs to grow first before these sort of derivative markets start popping up.
Hello, Kevin. Essentially, the comparison between Bitcoin and precious metals, I think, is a valid one. Currently, in the precious metals sphere, you've got very large derivatives in terms of paper, and this is said to be a means by which the price of precious metals are manipulated. Can you see the same thing happening with Bitcoin as paper derivatives or derivatives of Bitcoin start to develop? Could, say, the paper tail wag the Bitcoin dog, as they say? And if so, is there some way that can be, or some mechanism that can protect against this, especially with your high frequency trading?
Yeah, I think you're very right on that. I think there. As these markets develop and we get paper Bitcoin as opposed to physical Bitcoin or actual Bitcoin, we may see all manner of manipulation. With the HFT stuff coming in, just like the normal markets, there's always bad actors, and I think that's where having a strong regulatory oversight, which on one hand doesn't constrict the market, but on the other hand, really protects customers and really protects, people in the market. I think, having the right regulatory clarity and oversight would go a long way into rooting out all these bad actors. I think with any market, you're going to see sometimes you're going to see manipulation. So I think that's left for law enforcement and regulatory oversight.
More questions? So while I'm letting you folks have a question, I'm gonna throw one at you, Kevin. The glut of oil in the world markets right now is due to real increases in oil technology. So the ability to mine for oil has affected the price. Do you, when you're doing your forecasting, work out how changes in ASICs that are used for mining, when those come to market, do you work out changes in the hash rate and all of that? Do you factor all of that into your forecasting? So how much does hardware affect what's going on with the economics of Bitcoin?
Yeah, absolutely. I think from what I've seen, I think about a year ago, fundamental news in Bitcoin has sort of stopped affecting the price. I mean, not so much stopped, but it's been having a much smaller effect in price than sort of immediate short-term supply and demand. And what I mean by that is, if you look at the demand side, that would be something like consumer adoption. So, as there's more consumer wallets and the various different wallet applications, as you get more consumer adoption, you're going to see a lot more demand on that side. And on the supply side, that's largely driven by mining. So, on average, about one block, so 25 Bitcoins are generated every 10 minutes. But obviously this can change as the hashing rate goes above the difficulty. You get slightly more than a block every 10 minutes. Maybe you get a block every 6 minutes, and that sort of represents excess supply in the system. So what I'm trying to say is that the rate at which the supply of Bitcoin increases versus the rate at which the demand for Bitcoin increases mediates what ultimately the price settles at. And I think, the Bitcoin has been dipping a lot this year, and I think largely due to the fact that all these ASICs that were put into production around, November, December are, now finally starting to hit the network, and people are just creating coins at a very quick pace, much faster, and outpacing consumer adoption. So because of that, there's excess coins that need to be sold into the market, causing the price to go down. So I think I would like to say that we're pretty close to the bottom. I've done some calculations on that, but it's really hard to say. I've heard that there are certain miners, the cost basis of producing a Bitcoin, is like somewhere sub 250, and I've also heard numbers like around 300. But this is a couple months ago. So I think for the miners, there's sort of a natural equilibrium, right? I mean, nobody's going to leave free money on the table, right? So if the cost of producing a Bitcoin is much less than the market price of Bitcoin, they're just going to produce it and then immediately sell it, lock in those profits, and then reinvest the gains in more mining equipment. So I think it sort of mediates towards a price where ultimately the price of a Bitcoin equals the cost of producing a single Bitcoin.
Do you think there's going to be a move away from centralized exchanges, which obviously can be manipulated, to decentralized peer-to-peer exchanges over time?
I think that'd be interesting. I think there's a lot of groups working on that project. I think, there's really two kinds of manipulation that I think we should differentiate between. So first would be, like you said, with a centralized exchange, maybe they are the ones manipulating the currency. Maybe they're giving out their data feed to certain, privileged folks, 1 second or 3 seconds before the general public gets it. So for that, I think, with a decentralized sort of exchange, it would solve those problems. But I think in terms of like other types of market manipulation, like, pumping and dumping, no matter what kind of exchange you have, it's, if a group has just a lot of capital, they can always move the market. And if people follow them, they panic when the price is going down, or they get greedy and they buy when the price is going up. Then the manipulator can just exit the market or enter the market at a better price. So I think that type of manipulation is not really avoidable based on the type of exchange or type of marketplace that exists.
So, Kevin, what does the Bitcoin economy look like in, say, 10 years? So in 2024, we're having another GDCC and you're beaming in, probably holographically, 3D, everything. What will you tell us about how the Bitcoin economy looks and how it's working in 2024?
Well, I'd hope to be able to say that, the Bitcoin economy is booming and doing great, and it's taken up a large percentage of the commerce that goes around the world. But I think it's hard to say if it's actually going to be Bitcoin or it's going to be some type of successor to Bitcoin. I think even now, folks at like Counterparty and Ethereum, they're building out this so-called crypto 2.0 or 3.0, and arbitrary smart contract systems. So it's hard to say if Bitcoin will win out because its network effects are the strongest. It's still the most dominant of the cryptocurrencies, or ultimately something will come and supplant it as a better system. I mean, it's hard to say if better technology ultimately wins, or it's sort of like if you reach a point where it's good enough, then and it's gained enough traction, then that technology wins out. I definitely don't see cryptocurrency in general going away, and I think that, in my opinion, in the next 10 years, it's going to be very successful. Whether that is Bitcoin or not, I think is hard to say.
Yeah, I mean, we come back to the VHS versus beta argument, and the fact is that the network effect tends to trump the better technology almost every time. I mean, you can point to a few examples otherwise. So once we have cryptocurrencies as an embedded part of the economy, how does that actually change the way our economy works, or does it change the way our economy works?
Yeah, I see it changing the economy in many ways, actually. I think the most important thing is that it reduces frictions all around. So to draw an example, right now the remittance market is, there's very high costs of moving your money around between different countries. Either you go through a bank or a series of banks, and they have to connect up to each other. And they, as they pass it along, everybody takes a cut in the middle. So I see this type of, I see Bitcoin as this sort of disintermediation where, there's either no middleman or at least fewer middlemen. And because of the frictionless nature of Bitcoin, you're going to see costs for remittance go down. So if you're working in America and you're from India, you need to send money home to your family. Instead of costing 8%, maybe it only costs 1%. So I definitely see that being a huge effect once Bitcoin or some type of crypto becomes more successful. And then on the payments front, right now, we have credit cards, and the merchant gets charged about 2 to 3%, plus maybe 15 cents, 25 cents. And with Bitcoin, you can move money around the blockchain at sub-penny costs. I mean, you can move like $1 million and just pay 10 cents. So it's the frictions are going to get reduced, and I think there's going to be less money for the various middlemen in the economy. So I think disintermediation is one of the key aspects and great things about Bitcoin.
Right. I mean, this brings up a comment that I saw from, I think, the head of payments at Walmart, who said he didn't care what happened with the payment system they were using. He just wanted to hurt Visa, because he just wanted to take their 2.5% away. So is it possible that once we get the bit license, that we will actually see some massive retailer jump on board with Bitcoin because it's going to cut out the middlemen of the credit cards?
Well, yeah, I think, not just, large retailers, but also, small mom and pop stores. I'm sure if you go to some of them, you'll find that they have a minimum for using your credit card. You have to buy at least $10 worth of things or $20 worth of things before you can use your credit card. And the reason is because, these, payments networks are really charging them up to use that service. But if you pay with Bitcoin, it's a lot cheaper. And I guess some of those savings can be passed on to the customer in terms of a lower price.
Ladies and gentlemen, thank Kevin Zhou.
Thanks.
Thank you very much, Kevin.
Thank you.